It's okay to extend. It's actually strategic to extend. But does that mean you have an extension to pay? It does not. Now we need to talk about some strategies of, okay, I'm going to extend, guys. What do I need to send in? Now, how much to send in? Now, I've got an article on this. I'll have it down in the description. You can also go to markjkohler.com and under the blog, just type in extension. And I've got 5 different guidelines of how much money you might want to send in. Now you may say, why do you have 5 different guidelines on how much to send in? Because if you knew how much you owed, then you'd send in that amount. But a lot of times you're filing an extension because you're like, I don't know how much I owe. Yeah. So you kind of got to have some guesstimate type strategies. Yeah. Whatever you do owe and don't send in with your extension is only 0.5% per month. See, that's the 10 times point. Yeah. It's 5% per month for not filing an extension. It's only 0.5% per month for the amount you owe if you don't owe. It's funny. They're like, well, it's okay if you owe us. It's only 0.5% per month plus 6% interest. The penalty plus the interest. At the end of the day, that's less than a credit card. 6% per annum and 0.5% per month. So it's not the end of the world to owe.
You don't want to, but it's not the end of the world.
No. Guideline number 1, send in 100% of what you owe. For you engineers out there that have kind of figured out what you owe, that's for you. But for the rest of us, we're going to go back to those other options. A lot of people will do a draft return. You might just pay $50 for Turbo, fill out your return, kind of come up with what you think you owe, and maybe go 110% of that. You know, just add a little cushion. That's guideline number 1, and that is doing a mock return. Yeah. Guideline number 2 is send in the same amount you owed last year.
Yeah, if your income was the same, same situation, dependents type thing, look at what you owed last year and try to get in that same amount. So in general, you're going to be online. The tax laws change a little bit. Obviously, your income could fluctuate 10, 5, but if you had a significant change, obviously that's not going to work. But start there first. Yep. A lot of people are going to have pretty consistent income, even those that are self-employed.
What Matt just said is guideline number 2, send in the same amount of what you owed last year when you send in your return. See, for example, you may say, well, I owed 10 grand last year, but I had withholdings of 8, so I only sent in 2 grand. What we're saying is send in the same 2 grand this year if your income is approximately the same and you had approximately the same withholdings. See what I'm saying? So look at your last year's return and how much you sent in at the very end and do the same thing. That's a good safe harbor. Guideline 3 is you didn't owe anything last year, no changes, don't send anything in.
Go fish.
It's just been, it sounds kind of obvious, but it's pretty straightforward. If you're like, well, I didn't owe last year. Did you make more money? No. Okay. Then just file your extension. Okay, number 4 is, and I like what Matt said, if you made more money, here's the calculation. It's not that hard. What was your tax rate last year? So what you do is you look at your AGI, and then you take your tax bill and divide it by your AGI, and that tells you your effective tax rate. So if last year you made, let's say, 150 grand, and you sent in 10 grand in taxes, then you say, oh, let me see. Oh, I'm trying to do some math here in my head. I've got to make sure I get this right. So I'm going to say I owed 20 grand, and I had 150,000 AGI. Okay, that's 13%. So just go to your last year's return and say, okay, what did I ultimately pay in taxes? What was withheld plus I sent in? Divide that by your AGI, which is that line on the front page, very easy, 13% in this example. Then that's step 1 and 2. Then you go, I made about 50 grand more this year. Just ballpark it. Just say estimate high because you don't want to have that penalty, right? So you say, I made about 50 grand more this year. Ballpark. Okay. Times $50,000. That's $6,666. So you may say, okay, I'll send in 7 grand. Yeah. Just estimate a little high. You kind of just a little math. Yeah. And you're done.
Now, as the tax brackets work, and many of you know this, we have a graduated tax scale, right? So when at the 150, we're adding income on, that's actually at your highest rate, not your blended rate through the year. So this is the way if you want to send in kind of the minimum to see where you might be at. But you might actually owe a little bit more than that because of the blended scale. So
guideline number 5 says, well, I know I'm gonna be in a higher bracket. I made an extra 100 grand. It was a little much, So it's I don't know if I can rely on that effective rate. I'm a little nervous to rely on that. So I say the safe harbor is 25%. Just think of how much more money you made last year compared to the year before. Multiply it by 0.25. Send that in with what you sent in last year, because it's on top of whatever you normally sent in last year. And there's your deposit. So maybe if you massage your tax return properly, you'll get a little refund.
Yeah.
But at least you're not paying the penalties.
I like
so
that.
that's guideline 5.
And some of you might be like, guys, I owe and I don't have the money to pay. Okay, that's okay. Still file the extension, pay as much as you can.
Yes.
Get that in by April 18th. You might be chunking away at it in some payments before you even file by October 15th.
Yeah.
And that by the time you file on October 15th, you're ready, or you just got a little bit of amount you got to true up. Realize you are still going to have some penalty on that amount that's owed. But if you even can't get it all paid by the time you file, that's still okay. We've got a lot of other strategies there. There's a 180-day to pay option that the IRS gives you where you just say, hey, you can request it. Give me an extra 180 days. This is after October 15th. I'm going to get caught up. Yeah. And then try to work your way back and get caught up.
I want to reiterate what Matt said. A lot of people get so stressed out and scared. I don't have enough to give to the IRS, so I'm not even going to file the extension. Now, remember, what's worse, not paying or not filing? Not filing. So out of fear, people don't send in the extension thinking, well, it's not going to help me anyway. I owe. Now the IRS is in the dark. They're pissed, right?
Yeah.
And so it's a very common thing for people to think. Tell your friends, tell your family, don't do it yourself. File the damn extension. Then we'll worry about if you don't have enough to send in. Because again, the bigger penalty is not extending. So just do it, get it on. Here's the 5 guidelines on how to estimate your deposit for your extension. Because you're going to file an extension anyway, everybody, right? We've convinced you. So now it's how much do you send in on that little line there. Number 1, do a mock-up of your return. Number 2 is, if you didn't pay in last year and your income hasn't changed, don't stress. Number 3, send in the same amount you did the prior year. How much did I owe last year? You have to look at how much was withheld versus how much was you sent in. That's the tricky part I'm trying to comment on. Kind of have to look at that dynamic between withholding and paid and make sure you're putting in what you really need to. Number 4 is where you're going to say, okay, I figured out what I owed last year and I'm going to, or paid in taxes. I'm going to divide that by my AGI and come up with my effective tax rate. And then I'm going to do a calculation. This is guideline number 4 and go, I made 50 grand more or 20 grand more, not a significant amount. I'm going to multiply that by my effective tax rate and add that to my deposit. That's number 4. Number 5 is where Matt said, all right, I had a big year last year. Probably bumped into a higher bracket. My effective rate's really not going to be that accurate. That's when you go with the safe harbor 25%.
Those same formulas are what you'll do on the state return, by the way. So that same methodology works on the state return as well as the federal return.
All right. Thanks, everybody. Have a great weekend. We'll see you next week.
Thanks.